Viacom is due to report its latest quarter results as a standalone company before next month's expected merger with CBS. Shares of the media company are down 31% over the last year, but it's not stopping our next guest from being positive on the stock. Joining us now, and looking over all of us, almost like a god looking down on us.
Take the shot,
you got to take the shot. He's so large, and he's not in studio, but he is here, and
I can go out and just reach him.
What are those?
The camera doesn't do it justice.
It doesn't.
You got to get close.
You got to get close. What are those theaters called? With the? That's what I feel like. I'm in one of those places where he's actually here, where you go and see a mountain.
Oh, you mean like a Cisco telepresence?
No, the ones that are everywhere. I mean,
3D
no, Bob. We have the
4D, 3D.
No, you go to the planetarium.
It's a really bad game of password.
Forget it. Joining us now, Viacom shareholder. It's a public company. We had the guy on all the time, Tim Lesko.
IMAX.
Oh,
yes, he's like a Tim. You're on an IMAX screen here with sense around. So be careful. Tim Lesko, partner at Granite Investment Advisors.
Sense around.
Yeah, it's an investment firm with more than $659 million under. Okay, tell us about Viacom. Why you think that's a way to go in media?
Well, certainly we've seen a massive change in the distribution of media. And if you're not Disney and you're not Netflix, you're certainly not getting a valuation from the street. Viacom's trading at about 5 times earnings. CBS is trading at about 4.5 times earnings. So as we enter earnings day, it's hard to see how bad earnings could possibly be to justify that kind of multiple from the market. They've got some pretty good legacy assets in Nickelodeon and in Paramount Pictures. And Bob Bakish has done a good job of turning around the current content. You're looking at trying to get MTV back on board and some of the other channels that they have. So we're pretty bullish on Bakish as a manager and the future of Viacom. And putting the team back together with CBS just adds more content and more power in the future.
We got a few to get through. We could talk. We're in media, so we love talking about media. But let's talk Nike quickly. It seems like it's close to some new high territory, isn't it? You still like it though.
Well, it's hard. You know, we own Nike in our growth strategy. It's hard to argue with their leadership in the space that they're in. They've done a good job over the past 5 or 6 years of narrowing their business back to focus on their core competency. For a long time, it seemed like Nike got stretched into every possible sport they could be in, some of which were non-core. And it's about the shoes, and the shoes drive the apparel. So we really see Nike as a much better company than it was 5 years ago, and maybe can stay on this growth trajectory.
You like the management changes and the management that's there now?
Well, certainly you've had a management change. Anytime you have a management change, it can be disruptive. But the shoe business is moving into more customization, more direct-to-consumer business. And they just announced that they are no longer selling through Amazon, which implies to us that they think that they're gaining their own foothold on their own, as well as perhaps they're seeing some of their other distribution channels like Foot Locker push back on their previous distribution strategy.
Okay, how about Walmart? And that plays into what you were just saying about Amazon, too.
Right. You know, Walmart is, about 5 years ago, Walmart came out and discussed how they weren't going to grow their earnings for a little while so that they could become the next Amazon. And in a way, they really have. They've increased their online business. They've become a support system for other retailers, and they're growing that online business very fast. All at a little bit north of a market multiple, where you have their competition trading in the stratosphere. So if you look at two companies, one was a bricks and mortar retailer that's moving towards the internet, and the other is an internet company like Amazon moving towards bricks and mortar. So I think we'd rather own the lower valuation in that metric.
So there's room, obviously, for both, and Amazon's not just obviously not just internet ordering with retail. Obviously, it's not just digital, and Walmart's effectively moved in there as well. So the world's big enough for both to be very successful. Maybe nobody else.
Yeah, well, I think so. Right,
Yeah.
I think so, and I think here we're heading in, and part of the bumper music talked about a stat that how many million people visit Walmart or Walmart online on a weekly, monthly basis, and we'll pay close attention to foot traffic more than we will short-term earnings numbers. But Walmart really is a fantastic logistics company, and are finally seeing the benefits of that.